Hey everybody, what is up? Welcome back to Final Trade. Let's have a talk about inventory accounting for tax purposes. So I used the spreadsheet the last time just in the video about basic bookkeeping and accounting for your hobby business of TCG, whatever you're doing. And so now I've just kind of filled in some fictional inventory that I've bought here. And let's just pretend that you bought these 4 Strixhaven draft boxes, a couple of MH2 set boxes, and a couple of Kaldheim collector boxes. So I've recorded the cost basis of what you spent on them. Don't worry too much about the dates. And we're going to pretend that we sold one of the Modern Horizons 2 set boxes. Okay? And so the question is, how do we account for all of this on our IRS Schedule C? And of course, Schedule C is your profit or loss from a business. And what we're going to be doing here is basically this form uses a model of, for inventory accounting at least, it uses a model of what did you start with, what did you accumulate, minus what did you deplete equals what you're left over with at the end. And it takes a slight variation on that in that you calculate what you depleted by already knowing what you have at the end. So let's just get into it. And the reason I'm publishing these videos out of order is this part 3 here on this form of cost of goods sold, which is your inventory accounting. You kind of need to do that first before you do the expenses up above on the first page. And it just helps you to understand when I'll come back later and I'll make a video about the expense items and what they kind of mean and the kind of things you would include on them. It'll be good to have this as a basis first, even though on the forms, this is on the second page. So line 33, method, most of us are going to want to do cost accounting, not market. You don't want to have to try to track the market cost of all of your individual things. An example of where you might want to do this is, let's say you had some kind of company and you owned like an oil well or something, and the value of the deposits went down because the market price of oil went down or something like that. You might need to do market accounting instead of cost accounting. But in this case, we're not going to treat it like that. You could go and look on TCG Player and figure out what the value of every box you have is and try to do your accounting like that. It is probably not worth it, and I would not advise it. Just do cost accounting, which is basically accounting what did I pay for these items. Line 34, was there a change in determining quantities, costs, or valuations between opening and closing inventory? Of course, opening and closing inventory means your inventory on January 1st and your inventory on December 31st, assuming that your business's fiscal year aligns with the calendar year, which it probably should. There's probably no good reason for people like us to not do that. And was there a change? When might there be a change? Let's say you had an employee who stole a bunch of product and you need to account it in your inventory at some point. Maybe you'll do that when the year rolls over. So if you put yes, attach an explanation. And I've had a lot of times in my life where I've had something on a tax form and it says attach an explanation. And literally what I do is I take a blank piece of printer paper and I just start writing. And I just write a quick note. I explain my reasoning, and the IRS has always accepted it and been fine with it. So, despite the fact that the IRS does own tens of thousands of firearms, they are not always pointing them at you when it comes to what you fill in on every line on these forms. So, line 35, inventory at the beginning of the year, if different from last year's closing inventory, attach an explanation. So, not only might you have this explanation of, the method of accounting may have changed, but if you had a difference in the inventory, like maybe you just made a mistake when you did your tax form last year, and this year you caught the mistake, and so you just need to adjust it. Again, just attach an explanation and say, hey, I made a mistake. I found 10 more cases of product I didn't know I had, and, here's how I'm going to adjust that. And they'll work with you, and again, they're not out to get you all the time. So let's take our pretend business, and let's say at the beginning of the year we had $3,000 of inventory, and purchases less cost of items withdrawn for personal use. So the IRS does not want to let you get a break if you buy something through your business, but then you take it out of the business and you use it personally. Like you buy a bunch of Pokemon theme decks and then you take a bunch of them out and you hand them out at your cousin's birthday party. That's not going to fly. You need to account for that properly and not make the IRS and the government pay for you having done that. So what was the total purchases? We just add these up and it's $1,000. How convenient. So we'll put $1,000. Cost of labor. Do not include any amounts paid to yourself. So most of us are just going to be doing this on our own. We have no employees, so the cost of labor is zero. And most of us, for a while at least, will not be paying ourselves. At some point, if your business is cash flow positive, you could think about having some money come out of the business every month or whatever to give yourself a supplemental paycheck. And of course, that is the goal. But for the small people like us just starting out, these are probably going to be zero. Materials and supplies. This is a very interesting one. This is asking if you have things that basically correspond one-to-one with sales that are not specifically the item you sell, but are required in order to sell it. And let me give you an example. Let's say that your company builds some kind of complicated, big, heavy valve for large water systems, like 10 or 20-inch pipe valves. And so they're these huge cast iron valves, and then you put some gates in them and a stem and a all the rest of the equipment. And then to ship them all over the world, you're going to need a pretty substantial pallet to put this on. So you need to build some kind of pallet with a box around it with, whatever accommodations so that it arrives safely. And those materials and supplies will have a significant cost. You may be talking about several $100s in order to build this container to ship it in. We don't really have that problem. And it's much easier for us to account for things like sleeves, top loaders, bubble wrap, padded envelopes, and cardboard boxes for shipping. It's much easier for us to account for that in the previous section. For expenses, there's a supplies line up there, and we account for it there when we buy it. And if you account for it here, you kind of have to keep inventory of how many envelopes do you have left, how much bubble wrap do you have left, because you're doling it out on a per sale basis when you do it here in part 3. So I don't count any of the stuff here, even though when I sell something, there's a padded envelope involved, a piece of bubble wrap, there's some tape. I don't try to account that here on a what was my cost per sale, or for the total of all my sales, how many 20-cent envelopes did I consume in the business. I don't account that here. Instead, I say on the previous part, I will say how I spent $30 buying 100 envelopes or something like that, even though some of them I still have, some I've used. But if you do it on page 1 under actual supplies, you don't have to keep inventory of it. And that's the big substantial thing. If you're selling those giant valves, you may want to go ahead and buy a bunch of wood and pallets and build them up. And then you can track an inventory of how many shipping pallets you have for those giant valves you build. But for a business like this, it's much easier for us to just not put any materials or supplies here and instead account for it on the first sheet. IRS is fine with that. And it's honest accounting. That's one of the big things when you're dealing with accounting and the IRS. Be honest. Try to understand the intent of the question they're asking, and try to give a good faith answer. And that'll get you a long way towards just never having any problems with them. Line 39, other costs. I love this one because in the instructions for this form, there is nothing. It simply says other costs. And this comes down to an interesting thing that happens in accounting where different businesses can have the same event, but treat them very differently in terms of their accounting. And let me give you an example. Let's say you run a little card store and you desperately need to buy a bunch of metal shelving in order to put boxes of products on. And let's say you're going to spend $10,000 on metal shelving. Well, you will probably depreciate that as a capital asset, that $10,000 of metal shelving. But let's say you're a different kind of business. You are a business that buys and sells office furniture, and you want to buy $10,000 of metal shelving in order to resell it to customers, maybe customers who own card stores. And so both businesses are buying $10,000 of metal shelving, but they are buying them for different reasons. The card store buys it to use in the business and in the course of running the business over a long period of time. And the office furniture store buys it in order to sell it as inventory. And so they would account those two events totally different, despite the fact that they are buying the same product probably from the same distributor, maybe for the same price. And so this line 39 other costs kind of cuts to that and says, tell us why this is, go ahead and have the latitude to do things you need to account for in your business that are special, because all kinds of different businesses will have all kinds of different weird edge cases like that, and you need ways to honestly account for them. We're probably just going to put 0. So add lines 35 through 39, and this is basically the high water mark of inventory that you had for the year. And then it says, go and tally up your inventory. Do, actually in the verb sense, do inventory your items. And this is pretty easy if you set up spreadsheets like this, because we say, oh, we sold this. And so we know that this $1,000 minus the $200 we sold, we now only have $800 of inventory. And so we can put 800. And then the cost of goods sold will be line 41 subtracted from line 40. Sorry, I did that wrong. That was the inventory at the end of the year would have been your 3,000 plus your 800. So it would have been 3,800. There we go. I knew something was wrong there. So we have $3,800 of inventory at the beginning of the, at the end of the year, because we started with that 3,000 and then we added 800 over the course of the year in net. And so the cost of goods sold is the difference between those, which is 200. And that should jive with what we get from this. So if we added up all the ones that we've marked as sold, then it sums to 200. And this is your accounting for inventory. So there's a line on the first page where you come back and you enter that in, and somewhere around here, oh, I forget. But that's the idea of inventory accounting for your Schedule C. It's basically a matter of having enough records to know what you've bought and what you've taken out of your inventory through sales or through personal use, or maybe through loss or shrinkage if you have an employee who steals from you or something like that. It's pretty simple. The kind of model behind it of starting plus accumulation minus depletion equals ending is pretty easy to understand, and there's really not much to it. Let me know if you have any questions. I was really surprised by how much positive feedback I got from the previous video where we built up this spreadsheet with our mileage and our credit and sales and expenses and all these things. And remember, I just have this one tab here for MTG boxes. In reality, I have another tab on my real spreadsheet for Flesh and Blood boxes, one for Pokemon boxes, and one for singles, I call it, even though it's kind of singles plus bulk cards. So you might have multiple sheets like this that you can sum together to get these numbers. Let me know if you have any questions, any comments, and I appreciate the good feedback that I got for the last video. I was really surprised. I thought people probably wouldn't respond very well, but I felt like it was a video that needed to be made. So let me know what you think about this series. And as always, like, comment, share, and subscribe, and join me on Final Trade. Thanks a lot.